So, Frank, Ivan, and I were just jumping into everything. We were trying to see if we could get some commentary at all on yen crosses going. A lot of people have questions about it, and then Ivan was going to go over something as well. Ivan, what were you looking at? Do you want to share with us?
I was just looking at my New Zealand dollar, Canadian dollar that is still alive, but it is less than alive. So I'm just showing that I'm in loss. It's profit and loss in this game. So, okay, I haven't closed anything, but, it doesn't go great. So, I hope it goes down.
So how long you been in this trade? A couple days now?
Since 19th, 9 days now. Yeah.
Okay.
A bit in and out.
Gotcha.
But, yeah, it's all right. It's all right. But I saw your S&P trade, though. That went well.
It's going well. But I full transparency.
But didn't you buy it here?
Yeah, my first entry went bad. My second entry went great. So it's going overall okay. So full transparency. I didn't catch the bottom perfectly. I traded it first, got stopped out, and then later on I was like, Frank, I'm gonna take another shot here, and then I bought it. And I think what sort of helped out was some of the good earnings reports that we got from Meta, from Amazon initially. Frank, did Amazon erase those gains?
No, it's opening lower, but it paired most of its losses
because it popped after hours, and then I want to say it like erased all the gains that it made. But maybe
kind of it's more break even now. It's at pre-market's at 107.
Gotcha. Okay.
Earlier it was the low 100s, like 104, 105.
Yep. So of course those things have effect on especially things like the NASDAQ. Yesterday, Frank, we talked about the NASDAQ. Ivan, I want to get your take on the NASDAQ, and then I want to come back to Frank, because Frank, I don't know if are you still long NASDAQ?
No, I got stopped out. I trailed into profit because I was not trying to hold on to that for the long run. It came all the way down to my stop, so I'm out of indices.
Okay, Ivan, do you have any ideas on NASDAQ or S&P? If you had to buy one, which one are you looking at?
S&P, I guess.
Okay.
Well, it's kind of like, if we are going to go into recession, just if everything goes to crash and everything crash and that kind of thing, I believe that Nasdaq will be more volatile and have a deeper pullback. So not that that's going to save me anything, but just have a bit of a love, because I generally tend to try to buy these regularly anyways. Just as
yeah. Sure. No, I mean, in terms of a longer term hold, I love indices, but I also really like trading specifically the S&P 500. Though, recently tech, it's an interesting story for the indices traders out there. The NASDAQ has been kicking butt compared to some of the other ones, especially for the real OG indices traders. You guys know things like, the Russell. The Russell has been getting just left behind.
This is the last week to take advantage of the massive 40% off sale on the EdgeFinder. And don't wait any longer, because this is the lowest price that it'll be all year. The EdgeFinder is a revolutionary trading software that combines fundamentals and technical trading all in one to help you find better trading entries. This is the same software that all of our expert traders use while scanning the markets. As we strive to make the EdgeFinder the best trading tool of all time by updating and upgrading it regularly, you'll never have to worry about paying for anything, because the EdgeFinder is a one-time payment for life. So what are you waiting for? Get it at the lowest price of the year before it's too late. To get access to the 40% off discount, make sure you use promo code A1YT at checkout. If you have any questions about the product or sale, click the chat with us link down in the description below to automatically get connected with one of our team members right now. Remember, promo code A1YT for a huge 40% off discount on the EdgeFinder, ending very soon.
And, you may ask, well, why is that? Why is the Russell not performing compared to the rest? Well, the Russell 2000 index, many of you guys, NAS 100, you trade maybe SPX 500, you trade US 30. These are the sort of regular names in the Forex futures world that everyone talks about. But the Russell has underperformed. And again, if you're really going to be an indices trader, you need to understand what's going on underneath the top level. And underneath the top level, as Frank and I were just talking about with Amazon, we've been having really good earnings, and the mega cap tech stocks especially have been really outperforming. So for example, you have, if you're going to be trading NASDAQ, you have to understand Microsoft leading the charge here. You've got Google performing well, right? These things pushing higher and pulling up the market with them, compared to the Russell, which has seen really sort of here and there sort of recession fears still sort of lingering around some of the more broader markets. So very interesting to see the few taking the lion's share here in terms of indices, most of which are pulled up by a handful of big name stocks. Anyways, just a little bit of a tangent there. Ivan, I'm long S&P 500, but I really like the idea of NASDAQ longs if we're able to break the highs. Like if we're able to see this, and that seems like almost like a chase, but I'd be waiting for a pullback. I'd have a stop in place, and it would be sort of what you and I refer to as sort of more of a aggressive trade. Like not necessarily a big trade in size, but like if earnings are strong, hey, it has the potential to squeeze higher a lot longer than people may think. So I don't know, just a take on that. What do you think, NASDAQ? Either one of you guys, what do you think?
Well, to your point for the NASDAQ, I don't think it's in the S&P. I don't think it's really completed its move, but at the same time, I'm still not trying to go long at any point because I don't see like very much upside to begin with. Mm-hmm. Earnings, although they were mixed and leaning towards positive earnings, like beating estimates, they were all overall lower than what we had like last year's Q1. Sure. Like the pace is just slowing down, and I mean like any news is good news almost for the stock market, but right now it's just not looking great. I don't think PCE really is a huge factor in trading the indices right now. I think it's earnings, and they're probably going to try to end on a positive note, but every positive run is just taken back by another pullback, so it's kind of unpredictable. And
I'm hoping it's the exception this time around, Frank, just because selfishly speaking, I've got my S&P long right now. So I'm hoping that you're not right, but it has been very much the case. You see these.
Well, I think short term. I think short term you got a pretty decent shot. What I have drawn up is what kind of looks like a head and shoulders. On the daily chart, at least, we have this first high followed by another high, which is the head, and then a lower high. So if this continues, I don't really know if it's going to have that momentum to get up to the 4300s where
Sure.
When was that? Summer of last year, August. So just kind of hard to predict.
So Ivan, I don't know if you caught some of I think you were commenting in the stream here. Walk us back, maybe for people who are just tuning in. What was the numbers? Was there anything of substance that came out here this morning? Of course, a lot of people tuned in for the news coverage. So in terms of numbers, we had PCE price index. What was your take on some of that stuff that came out?
It's just a bit weird because the core came out 0.1 better than expected. A month came in 0.3, but the PCE itself came out way less than expected, 4.2 and 0.1. And I don't know why they have hidden it, like it doesn't really matter. But if you go to, I used a bit different sources, but Financial Juice, they had it up here somewhere. I can't find it right now, but but they had it here, and I'm like wondering, like, there it is. So, like, is this supposed to be like?
Ivan, zoom in just a little bit. That? Sorry to interrupt. Just zoom in a little bit so we could see if you could do your.
Sorry.
Control plus. There you go. Yeah. Thanks.
That one. I'm looking at that one. All right. So last time it was 5. Now it was 4.2. So that should be dollar bearish. Because expenditure is another way of measuring inflation. Great. So with the market reaction sending gold higher and then lower again, I'm like, I think they didn't really like, it doesn't really matter to them, because this one should have been downtown if this was a significant move.
Sure.
So I'm just measuring the response rate, but those are from next Wednesday.
Yep.
And when it comes to S&P and Nasdaq and stuff like that, I think that can be a very big catalyst for higher prices if Fed peaks or announces they're going to peak in the future.
Yep. Thanks for that. And again, I'm just going to read out what I've got here in front of me in terms of what we got this morning. Of course, PCE inflation taking sort of the lead of the market. We have PCE price index in the U.S. rose 0.1% in March, easing from a 0.3% advance in February. The core PCE price index was up 0.3%, the same as the previous month, and in line with expectations. On a yearly basis, as you mentioned, the PCE inflation slowed to 4.2%, the lowest since May of 2021, while the core index eased to 4.6%, matching December's 13-month low, but slightly above market expectations of 4.5%. So, of course, why this matters for those of you guys who are like, PCE price index is not one that we talk about nearly as much as, for example, when we all get up on here and we talk about CPI or NFP. These are the sort of the clear ones that everyone pays attention to. But this is more inflation data. And as long, in my opinion, as we continue to see inflation sort of do its thing, where it continues to go down, and again, I am sort of probably the most, I guess, the bull case. Frank and I are sort of, we deviate a little bit on this, where I'm like, the most oriented towards, I think the rate cuts could come sooner. Frank is a little bit, I think, more cautious and as a reasonable stance. I think that, as long as things don't change here, as long as when we do get that next CPI number, we don't start to see this thing erase, I think we're going to get inflation under enough to the point that maybe not immediately, but perhaps towards the end of the year, we're talking possible rate cuts. And we'll see. Again, this is just my take on it. Frank, what do you think? I mean, this inflation number, not necessarily super impressive, but also not bad, not getting us to go back up on inflation by any means either. So I don't know. What do you think?
No, I think for the most part, they've kind of priced it in. They're expecting maybe one more, and we've talked about this before, but I think as it stands, they're going to do one more in May and probably hold off for a while. And the markets, they've expected that. All of 2022 was expecting the 5% and higher if need be. So we're going to settle at 5.25%, and then from there, it sounds like the rest of the year is probably going to be maintaining that interest rate. So at this point, I think they're pricing in like whatever's going to happen. So
yeah,
it's like looking
next
for
week, Frank, too. We have the May meeting, and what's very interesting to me is like, there are some people, there are many analysts as well who are forecasting for more than one rate hike, like thinking that, we're going to get the 25 basis points, but there might be a second and a third down the line here this year. And I think that that's possible, but I'm approaching it a little bit more reactive in the sense that, like, if in the upcoming meetings we get it from the source, if we get Jerome Powell starting to say, hey, look, we might need to go another 25, might need to do another 25 after that. If we start hearing that, then I'll be sort of convinced. But until we start seeing that, it seems like inflation overall is still creeping lower. And, we only, I think the market expects 25. That's pretty much locked in. I think the market is
right
in that end. But from there, I think it's up in the air. And for me, with good tech earnings coming out for some of these big names, I personally, I'm still long biased in the indices until proven wrong. And again, I have stops on my trades for a reason. We talk about that often. We'll see if that.
Well, I agree, but what the market seems to not be pricing in is the slower GDP. And inflation is ticking down, but it's still hot.
Right.
It's not a good look on the economy, and the stock market's a reflection of that.
Right.
So the fact that we're still seeing contractions is not a good sign. High inflation and slower growth is a pretty bad place to be.
Yep.
And earnings coming out, some are better, some are worse than expected, but overall everything is down. So it's still hard to look at the market and say like, okay, we should be trading this to the long side.
Yeah, and the last thing I'll say in terms of what you mentioned about inflation sort of still very high. It is still very high. And also, to the bears' credit, many people, one of the bear cases that people are trying to make in terms of the inflation story is that we've come down pretty quickly off those very hot numbers, but it's going to be very hard to get us underneath, like, for example, like 4%. Some people are arguing that, we're bottoming out here on inflation, that we may. But for me, like I said, I'm just being reactive. That number continues to creep lower. And until that stops, I'm going to sort of be positioned dollar bearish, etc. Ivan, what do you think in terms of the inflation story and the dollar? Do you have a take on that?
Yeah, also we are seeing it coming down a bit, or it peaked like July last year, and because it's going to be a rocky, what do you call it, going into the future. But what is the current picture? The current picture is that inflation is falling, and dollar is kind of bearish. Just as long as you don't have any new bank crashes or stories, then we are probably going to continue. But that's kind of that's for dollar. But when it comes to inflation, the thing is that has been important. The reason for why inflation isn't falling as hard as it should be is the fact that you have the natural delay in occupancy rate and in housing prices, also rent prices, and that takes a year or so to get priced in because it takes time to negotiate those prices again. So that's kind of where it's going to be the question: where is that going to end? Where is that peak in housing?
Yeah, no, all good points. I think in terms of streams, this was probably one of the most theoretical, but also very important streams to have. I definitely am in the camp of like, until something changes, I'm just going with the flow kind of thing. But someone in the audience had a good question. I want to just make sure I address it. Someone asked about retail sentiment. Probably a good chance to take a look at like positioning. We'll look at the currencies first here. So in terms of positioning, we have the most long-oriented currencies are the Australian dollar against the dollar Swiss, NZD USD. Ivan, you'll like that, of course. Retail traders very much piled into NZD longs. We have euro, which is 50-50. Dollar yen, retail is short. Pound dollar, retail is short. Dollar CAD, retail is short. Kind of an interesting thought there. Updated thoughts? Anything on the NZD pairs, Ivan?
Yeah. Okay, what I'm gonna say is that it is not going down as much as I want, but it's definitely what do you call it? It's we're just getting better prices. I'm trying to stay positive here, even though we're now making higher high on New Zealand dollar CAD, and we're making lower lows on Australian dollar and New Zealand dollar. But I want these to go higher here.
Sure. Yeah. I'm curious.
Okay. Anyways.
NZD CAD, an interesting one. We have a lot of different, especially against the yen. It seems like people. That's one exception where people are more short biased on. I'm sorry, they're short biased on the NZD, but in most cases it seems like, especially against like the dollar. It's an interesting study just to look at where retail is positioned. We study this, guys. For those of you who are in the audience, the reason for this is because, again, we know that retail positioning is not necessarily like always a forecasting tool, but it can be very useful in understanding where we might want to avoid crowding the trade. So when I say crowding the trade, we're looking at NZD USD specifically here as an example. It currently has a very high long ratio by retail traders. So personally, I'd be a little bit cautious on the long side myself, because if I know retail traders are like buying NZD against the US dollar here, I'm going to be a little cautious to take that same trade. In fact, it even might point towards more, be skeptical or even bearish on something like this. So anyways, especially with the dollar seemingly overall still strong, it's an interesting one to watch.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EdgeFinder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.